So mortgage rates have been getting a lot of press over the last 45 days, and so has the Federal Reserve and what the public expects the Federal Reserve to do in the upcoming months. So I want to put this quick video out to differentiate first of all mortgage rates and the rate that the Federal Reserve controls, and what you can expect over the next couple of months with regards to mortgage rates. So according to Mortgage News Daily, the average 30-year fixed mortgage has dropped from about 6.8% to about 6.3% in the last month and a half. It's the lowest mortgage rates have been in about a year. You've also probably heard by now that the Federal Reserve is expected to lower the rate 0.25%. But it's important for you to know that they're not lowering mortgage rates. They don't have the ability to directly impact mortgage rates. The rate that they're lowering is called the federal funds rate, and that directly impacts credit card rates, car loans, SBA loans, lines of credit. Mortgage rates are based on certain bonds in the bond market called mortgage-backed securities. While the Fed lowering rates or raising rates impacts the supply and demand of certain bonds in the bond market, the Fed doesn't have the ability to directly lower mortgage rates. So if the Fed lowers rates 0.25% later this month, that doesn't mean that the average 30-year fixed rate mortgage is going to go from 6.3 to 6.1. Mortgage rates have seen a nice drop in the last 45 days, primarily because the jobs reports that have come out have shown that there's a lot less jobs created than initially estimated. And to take that a step further, it also greatly increased the chances that the Fed was going to lower the Fed rate in September. So the bond market already essentially priced in this expected Federal Reserve to lower the federal funds rate by about 0.25% later this month. What could move mortgage rates when the Fed meets, and foregone conclusion that they do lower rates 0.25% or lower the rates, is what they say after they lower the rates. So if they say, hey, this is it, we're not lowering rates anymore, you'll actually see mortgage rates go up more than likely that day or for a few days after the meeting. If the Fed lowers it 0.5% or says, hey, we're going to keep lowering the federal funds rate, you'll see mortgage rates get lower. So I hope that helps set a proper expectation on what you could expect from mortgage rates over the next 30 days as the Fed meets and more than likely lowers the federal fund rate 0.25%.